Good morning, beautiful people. This is Cindy Presgrace with Cindy's Realty Group by EXP. And one of the things that we've been actually talking about lately has been when are foreclosures coming on the market? How many foreclosures are we going to see? Oh, I'm just going to wait till there's foreclosure and the housing market crashes, right? That's all we've been talking about. And let me give you guys a reality check, okay? So this is the thing. Okay, so what you need to actually know about the number of foreclosures in today's housing market. So I was reading an article the other day saying that foreclosures have actually decreased, meaning that people are paying their mortgages because they don't want to lose their mortgage. They don't want to lose that precious house, especially, you know what? Because there's not many houses on the market, and to find your ideal one, you know what it takes? Takes a long time, especially to find that one. It's just like finding a partner, that special person you want to spend the rest of your life. Yeah. Okay, let's just get to the nitty-gritty here. Okay, well, you have seen recent stories about the volume of foreclosures in today's market. The context is important, very, very important. During the pandemic, many homeowners were able to pause their mortgage payments. Meaning, remember that thing called Forbearance? Yeah, through that program called Forbearance, okay? Do you remember that? Of course. Okay. And if you don't know what Forbearance is, it means that during that process, they were actually pausing those payments and either backing them up or putting them at the end of the loan and increasing their interest rates. I saw some of these interest rates were like 8%, 8.53%. Yeah, yep, true story. So the goal was to help homeowners financially during the uncertainty created by the health crisis, by the pandemic. Remember that thing called COVID that we actually had to wear a mask? Are we still wearing masks? Okay, there's some places that are still locked down. Okay, when the forbearance program began, many experts were concerned about the results it would wave in a wave of foreclosures coming to the market, as there was after the housing crash in 2008. So we've been trying to avoid this whole thing about the market to crash and all that. And they thought this was kind of like 2008, but nothing is similar from 2008 because right now, 2008, everything was overbuilt. Now it's not. So here's a look of why the number of foreclosures we're seeing today is nothing like last time. So if you're thinking, look, fixers-uppers are really hard to come by. Foreclosures, yeah, there's something wrong with that. So there are a fewer homeowners in trouble because people are wanting to pay their mortgages. And that's something that it's awesome, pretty awesome, because you know what? You won't see abandoned houses or something unless it's an absentee, and believe me, it's a totally different story here. Today, data shows that most homeowners are exiting their forbearance plan entirely, fully caught up on payment, or with a plan from the bank to restructure their loan in a way that allows them to start making payments again. So I'm going to give you a little bit of the insight of where we're at, especially with the forbearance program. You know, like so loans upon exiting forbearance program. Yes, a lot of people are exiting that loan program and they're actually being successful because banks don't want to deal with foreclosures. They want to actually, you know what, if they can actually keep those payments, that's better because they don't want nothing like 2008, okay? In this case, 37% were paid in full, which is amazing. 44.6% were workouts or repayment loan plans, which is amazing too, because that's actually helping people, hey, you know, you're paying a little bit here, we're restructuring here the loan, and whatever. And 18.4%, they're still in trouble. So it all depends on it's a case by case. I mean, it's not everything's going to be the same or anything. So they're saying that cumulative, and this is basically based on the numbers as of June 1st, 2022, March 31st, 2022. So the same MBA report, keep it more, mentioned above estimates, there are approximately 525,000 homeowners who remain in forbearance today. Thankfully, those people still have a chance to work out a suitable repayment plan with the servicing company that represents their lender. Excuse me. I need to drink more water. Okay, most homeowners, this is number 2, most homeowners have enough equity to sell their homes. So there's no reason, if you're going through trouble, forbearance, foreclosure, there's no reason why you shouldn't be able to actually sell that home and buy a new one, or, depending on your circumstances and how much in debt you are. So for those who are exiting the forbearance program without a plan in place, may have enough equity to sell their homes instead of facing foreclosure. Due to rapidly rising home prices over the last 2 years, the average homeowner has gained record amounts of equity in their home. We talked about this yesterday. If you guys didn't know, there is a lot of equity in people's houses, believe it or not. So Marina Walsh, CMB, Vice President of the Industry Analysis at MBA, says, given the nation's limited housing inventory, the variety of home retention and foreclosure alternatives on the table across various loan types. So borrowers have more choices today to either stay in their homes or sell without resorting to foreclosure. Why do you need to go to foreclosure? Do you have an issue? Tell me. Okay, let's just keep on talking about this, and then we can talk about that off camera. Okay. All right. Good. All right. So there have been fewer foreclosure over the last 2 years, and that is true. People don't want to foreclose. People are making their payments. So what is that telling you with the market? That is actually giving you a totally different indication that the market is not going to crash. So get that out of your head. Are we clear with that? Good. I was hoping that was going to be the case. So one of the Slemdom report benefits of the forbearance program was that gave homeowners facing difficulties an extra 2 years to get their finances in order and work out a plan with their lender. That helped prevent the foreclosure that normally would have come onto the market with a new forbearance program not been available. So if we wouldn't have that program, that forbearance program, then we would have been seeing a lot of people in forbearance. Believe me, a lot of people took advantage of the program. So even as people leave the forbearance program, there are still fewer foreclosures happening in today's market than before the pandemic, which is awesome. Actually the numbers have decreased a lot, immensely. So that means while there were more foreclosures now compared to last year's when foreclosures were paused, the number is still well below the housing market that was seen in typically likely like 2017 to 2019. And I'm going to give you more of insight of this because 413,480 foreclosures in the last 2 years. That's telling you, wow, that's wow. So let me go ahead and tell you in 2017, 2018, the average between 2017 and 2019, back in 2020, short sales and foreclosures, it was 161,260 foreclosures and short sales. So it went down to 2021. This is 38,040. And I'm going to give you the number would be, what is this indicating you? I want to hear your comments. I want to know what your thoughts are on this. So what are we talking about? What are you waiting for? What? Prices are going to increase anyways. Look, don't even get me started with that. Okay, so the current market can easily absorb new listings. Of course, because you know what? Anything that goes on the market, it will fly off the shelves. So when the foreclosures in 2008 hit the market, they added to the oversupplies of houses that were already for sale. It's exactly the opposite today. The latest existing home sales report from the National Association of Realtors reveals the housing inventory at the end of March totaled 950,000 units, up 11.8% from February and down 9.5%. This is basically houses for sale. From 1 year ago, it was 1.05 million. Unsold inventory sits at a 2-month supply at the present sales pace, up from 1.7 months in February and down from 2.1 months in March 2021. What is this indicating to you? Completely. A balanced market would have approximately 6 months supply of inventory. At a 2 months, today's housing market is severely understocked. Even if 1 million houses enter the market, there still won't be enough inventory to meet the current demand. I'm telling you guys, we're not this is an amazing seller's market regardless of the interest rates. Don't focus on that. Focus on what you really need, because you know what if the interest rates lower in the next few months? You know what you can do? You can refinance. Think about that. There's different options all the time. It's seeing what you want for you and your family. Do you still want to be in that property, or do you want to go ahead and move forward? Because you know what? Let's look at it like a relationship. If you are in a relationship and you go through a breakup and it's time to move forward, just don't think about that. I mean, and I'm going to tell you this is completely what you need to know. If you see headlines about increasing number of foreclosures today, remember the context is important. Context is important, people. While it's true the numbers of the foreclosures is higher now than last year, foreclosures are still well below pre-pandemic years. So in this case, what I'm telling you is, even though we have, the news are saying, oh no, 700 foreclosures, 700%. Okay, people, this is the same thing as interest rates. Back in the 70s, how high were the interest rates? Back in the 80s, back in the 90s, 2000s. Think about this. You guys have to compare. And this is why I'm here to educate you guys. So if you guys have any questions, this is Cindy Pressgrace with Cindy's Realty Group by EXP. And I hope you guys like my information and educating you today. Have a beautiful day.